There is a stock trading under $2 right now that has $520 million sitting on its balance sheet in cash and Bitcoin. Wall Street analysts have slapped a strong buy on it. With price targets as high as $5.50, that's a nearly 3x return from where it sits today. And almost nobody in your feed is talking about it. This company runs 24 hours a day, 7 days a week, in facilities spread across North America, burning through electricity to generate one of the most valuable commodities on the planet. It grew its revenue 72% year over year in 2025, hitting $229 million in total sales. And yet, the stock is cheaper than a cup of coffee. In 2024 alone, this company grew its core output capacity by 97% year over year and improved its energy efficiency by 40% in the same period. They operate 461 megawatts of energized capacity across 15 sites in multiple countries. The scale here is absolutely massive for a company priced this low. They just locked in a $300 million private financing deal with a division of Macquarie Group, one of the most respected infrastructure investors on Earth. 9 analysts cover this stock and every single one of them rates it a buy. Something is brewing here, and the market hasn't caught up yet. Now here's where it gets interesting, because this is not just a Bitcoin story. The company has been quietly pivoting its entire business model towards something far bigger. They're converting their massive energy infrastructure into high-performance computing facilities built for one thing: artificial intelligence. They have a 2.2 gigawatt development pipeline, and 80% of it is right here in the United States. They're building out facilities in Pennsylvania and Washington state specifically designed for AI workloads. This isn't speculation. The Macquarie deal I mentioned is literally funding the first phase of that AI build-out. Think about what that means. A company that already has the land, the power, the grid connections, and the physical infrastructure, now pointing all of it at the AI data center boom. The hardest part of building an AI facility is getting the power and the permits, and this company already has both. That is an enormous competitive moat that almost no one is pricing in. The company I've been describing is Bitfarms, ticker symbol BITF, Bitcoin mining and digital infrastructure company that has been trading on the Nasdaq and Toronto Stock Exchange since 2018. At the time of filming, it's trading at under $2 per share with a market cap of roughly $1.1 billion. That is almost absurdly cheap for what's sitting underneath the hood. Now, here's something you absolutely need to know before you go look this up. Bitfarms has officially rebranded and redomiciled to the United States, and the stock now trades under a brand new ticker, KEEL, as in Keel Infrastructure. The rebrand is not cosmetic. It signals a full strategic transformation from a crypto miner into a US-based AI infrastructure company. Same stock, same assets, completely new identity. The name Keel is deliberate. A keel is the backbone of a ship, the structural foundation everything else is built on. That's the positioning they're going for: essential digital infrastructure for the AI era. When a company changes its name and moves its legal domicile to the United States, they're sending a very loud signal to institutional investors, and institutional money is what moves stocks. Let's talk about why the upside case here is so compelling. The company has $520 million in cash and Bitcoin on its balance sheet, against a market cap of around $1.1 billion. You are essentially getting the entire AI infrastructure pipeline, the 2.2 gigawatt energy assets, and the operating business for roughly 50 cents on the dollar. That's called margin of safety. Q2 2025 revenue came in at $78 million, an 87% year-over-year increase, and the growth trajectory has been consistent across every quarter. Revenue for the full year hit $229 million, up 72% from the year before. When a company is growing that fast at this price, you're looking at a potential re-rating event the moment the AI segment starts generating real cash flows. H.C. Wainwright just raised their price target to $5.50, up from $3.70, citing progress on permits for the AI facilities. Chardon initiated coverage at $4.50 with a buy. The average analyst target across all 9 covering firms sits at $5.63 against a $1.84 share price. That's a 3x return implied by Wall Street consensus. Now I'd be doing you dirty if I didn't talk about the risks, because there are real ones here. The company posted a net loss of $209 million in 2025 on $229 million in revenue. meaning they are not yet profitable, and those losses were driven partly by impairment charges and operating costs. This is not a company you put your rent money into. The AI pivot is a thesis, not yet a revenue stream. The HPC facilities are under development, not producing cash flows yet. If Bitcoin prices fall hard, the mining economics deteriorate quickly and the balance sheet gets pressured. And like many small-cap companies, they have a history of issuing new shares to fund operations, which can dilute existing holders. You also need to understand the stock's volatility. This thing can move 20, 30, 40% in a week based on Bitcoin prices alone. If you can't stomach that kind of swing, this is not the play for you. High risk, high reward. That's the honest framing here. Here's the bottom line. A company with $520 million in cash, 2.2 gigawatts of energy infrastructure, a freshly minted U.S. identity, and a Wall Street consensus price target 3x above where it's trading today. Trading under $2 per share, while AI data center stocks are being valued at astronomical multiples. The market is not paying attention yet, but the smart money is starting to. This is the kind of setup that retail investors look back on in 2 years and say, I knew about that one. The rebrand to Keel Infrastructure is the clearest signal yet that management is done being a Bitcoin miner and ready to compete in the AI infrastructure arms race. The ticker is Keel on NASDAQ. Write it down. Do your own research. Nothing I say here is financial advice, and I am not your financial advisor. But if you want to go deeper on this one, I've linked a full breakdown in the description. And if you found value in this video, hit subscribe because we find these setups before they go mainstream.